Hey guys, this is Tajine Brown of Money Coaching Services, and today we are going to talk to you about 9 financial goals you should have in place by age 40. But before we get into the details, I'd like you to like, subscribe, and hit the notification bell so that you know when we are on. Also, we have upcoming training. We have credit card training coming up Saturday, June 22nd, and we have business growth training coming up June 30th. So you can visit moneycoachingservices.com/class. So let's get into the details. Da, 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 da. All right, so the first thing is that number one, reevaluate your priorities, right? Because finances is something that you have to plan for yourself, not necessarily by yourself, but it is important to know where you are going. So these plans should include retirement, what's going on with that, insurance, health insurance, life insurance, critical illness insurance, income protection insurance. These things are very critical at age 40. And also reevaluating where you are with your emergency fund. So number one is just looking at the big picture. Where are you? Where are you in the grander scheme of things? What plans do you have on the table for your brighter future? All right. Number two is, I write down a bullet point here, people, because I will just go on and on and on. All right. Increase your retirement savings, number two. Some of you who are not working for, and you're working for somebody else, you have a retirement plan, increase your retirement savings. But there are others of you, especially those who are contract workers and you're not on a retirement plan, and also business owners and you don't have a retirement plan, business owners, you can get a retirement plan set up. I am also a financial advisor, so I can create a financial plan for your business owners or any individual Jamaican who you're working and you don't have a retirement plan. I can create a retirement plan for you using the insurance companies that are in Jamaica. So we'll have a conversation on that when you want to. So you can send a WhatsApp to me at 876-499-6701, and then we'll break down what it is that you need to do, give you a quotation to work, right? So not to make this video a long one, we're just moving right along to number three. So number three is pay off all your debt. Now this is gonna be a little tricky for some of you. Pay off all your debt. At age 40, it is assumed in the financial world that you would have accumulated a substantial amount of funds after working for a long period of time. And most people would assume that persons start working either after they finish college or straight out of high school. So pay off all your debt. All right. This is a challenge for a lot of persons because you have persons going into their 50s and 60s And debt is their number one problem. They have too much debt, right? As you pass the age 40, because we're talking about all the things you should have by age 40, right? These things have to be cut out because a lot of other things may happen as you transition. You want to free up money for investing. You want to free up money so that by the time you reach the retirement age, which is age 65, some people might want to go to age 70, that you have enough wealth. But wealth cannot, will not be created if the form of debt you have is like a credit card, or you have a mortgage and the house is not making money for you and you can't pay it off and all of these things, right? So some of you might be saying this is, nobody has done that. People, I paid off my mortgage and all my loans August 2012. Now, which year we in? 2024. Mortgage was paid off, car loan was paid off, credit cards was paid off. So when I left the bank, when I left Scotiabank, I had zero debt, 100% debt free. So I am the coach for you because, as I tell you now, been there, done that, and you need people who have done the actual thing that you're teaching you, right? You have what you see in the industry is a lot of people who they have read about it and they have not done it yet, but they are teaching you what they have read, which is not bad if that is what they have. But in my situation, I can't tell you which street, which lane, which alley to go because I've been down those alleys and those streets. So yes, it is possible for you to pay off all your debt by age 40. If you have not done so far, don't hold your head, don't hold your foot, because it is not the end of the world. It is just in the financial industry, we have what we call benchmark. We have something as a guide so that you know, based on where you are, what progress you're making based on where you should be. So it's not something to say, oh, if you don't reach it, you are the most indisciplined person and you're not good with money and you'll never be good. We are not saying that. We would never say that. Never, ever say that. Because a lot of things can happen. Right? So even though I paid off all the debt, 2012, here comes divorce, people. And I am not a spendthrift. I've never been a spendthrift until that time. I maxed out 3 credit cards because of stress. Well, it could be other things. So thank God it wasn't other things. At least I know what to do to take my time and pay about the money and become debt free again. But all I have is credit cards. As I said before, my house mortgage is paid off, my car loan is paid off. The credit cards were paid off until I maxed them out because I was using the shopping to soothe myself while going through divorce process. So things will happen. Divorce medical bills, although I didn't have any medical bills, but I'm seeing other persons have medical bills. They have other things that are external to them, external factors which influence their behavior. And because of that, the finances get a little hit. But now that you are calmer, or know that I am calmer, I'm getting back on track. So I just have the credit cards to pay off back, and then I'm 100% debt free again. People, life happens. So don't stress out yourself. You have me to help guide you. Do not stress yourself. I will teach you what you need to do. And I'm the type of person, when I tell you what to do in a coaching, I will also send a WhatsApp and break down. Step 1, this is what you're going to do first. Step 2, step 3, step 4. I give it to you A, B, C, 1, 2, 3. Because it is difficult for persons to remember exactly what to be done. So instead of letting you try to remember what is to be done, I will give it to you as a quick reference, as a reference. Step 1, pay off this amount. This is the interest rate you should get. This is how long it should last. Everything. That's in your WhatsApp. That is what I send to my clients. And they appreciate it because they can just back out their phone and they have their plan or their steps of what to do. And I also send follow-up email just in case you lose the information on the WhatsApp. It's on the email, and just in case I delete it from my WhatsApp, it's in the email. All right. So that was number 3, pay off all the debt. Now, before I go to number 4, right? Before I go to number 4, I noticed this surge of persons doing debt consolidation. Debt consolidation does not pay off alone here. In the true sense of the word, what it does, it simplifies your payment process so that you pay a simpler repayment. What that means, you might have 5 loans, and the consolidation pool all the 5 loans into one, but you still have $3 million in debt, $3 million that you owe the bank. So say the 5 loans came up to $3 million when you did the debt consolidation. All it means is that instead of having 5 loans, now you have 1, but you still have $3 million worth of debt to pay. So it's not gone nowhere. So I always advise persons, it's not a problem for you to do a debt consolidation. Where the problem is when you stop there. Debt consolidation is a step 1 out of step 2 process. What that means, it only fixes the payment part so that it enables you to be able to balance, right? The step 2 part is that the money that you freed up from the debt consolidation, you can use it to help you to pay off that $3 million loan and pay it off. Some people pay it off in 3 years. I've done the calculation, right? So if you want me to help you to see when you get a debt consolidation, or even before you get the debt consolidation, come to me first. Let me structure the debt consolidation that you should request from the financial advisors, from your bank, right? Because I'll tell you how to structure it. Some of you getting debt consolidation and it no make no sense. You only save $5,000. What are you going to do with that? Sweet money. $5,000 can't buy nothing. So you paying $5,000 extra to one loan, or $3 million loan, or when you going to pay that off? So everything has to be done properly from day one. I see a lot of people that get the debt consolidation this year, and by the next 3 years, them gone again for another one. That is the wrong process. That means whatever was the root cause of you getting the debt consolidation is not solved. The debt consolidation is a band-aid. It don't solve the problem of you having the debt. You need to get rid of the debt. As we say, number 3 is pay off all your debt, right? All right. So as I said, the excess money that you would get from doing a debt consolidation, in my session, I show my clients how to use that money, literally show you. Meaning I forget nothing. You just follow what I tell you to do. 1, 2, 3, 4, 5, 6, and it's done. Right? Yeah, that's how my thing works. No guesswork in my session. You don't have to guess about anything. Right? And when you before you come in the session, please do not try to fix up what else. Because sometimes when you fix it and you come in the session, I have to unfix it. Because you are fixing it with your understanding of finance. What you know is not enough for you to realize that your fixing is kind of gonna cause you problems down the road. All right, so cool. So number 4, moving on, is a fully funded emergency fund. By age 40, you're supposed to have a fully funded emergency fund. This is the next sticking point for a lot of people because of all the debt, all the loans, all the credit cards you have, no savings now go on. There is no savings. And some people might be saying, oh, because they're not earning enough. I've heard those cries, but I've had clients who are earning $1 million per month, who not have no savings. So this thing serious. And because of, and I noticed that trend too, for persons who earn from say 500,000 up, when they have financial problems, they usually have no savings. No savings and very high credit card debt. One client, she had $4 million worth of credit card debt. She maxed that one credit card, maxed out. So people, I'm here to guide you to kind of end those types of things because down the road, it's going to be a problem. And this is why you have a lot of persons when they reach down the road, they're talking about bankruptcy and all of these things. Which, as far as I'm concerned, a person is earning $1 million per month or 500,000 per month, there is adequate income. So income is not a problem. The details of your finances is the problem. All right, guys. So what a fully funded emergency fund look like? So if you don't have an emergency fund, my recommendation, start first with having at least 1 month just to have something, just in case anything happens, 1 month of your salary saved up. But a fully funded emergency fund is 3 to 6 months of your expenses. In truth and in fact, some of your expenses are more than your income, which should not be at any given time. Never, ever if your finances are in order, should your expenses exceed your income. You might have a situation where you lost a job, medical issues, and so on. Well, those things are understandable because those are outside factors. But factors that are in your control, at no point should you have more expenses than income. Persons who earn minimum wage, you always gonna have that problem. You have an income problem. Anybody earn 150,000 per month or less, especially if you have kids, if it's even one, you have an income problem. Let me just make it abundantly clear. You have an income problem. So you're going to rely on credit cards and loans to buy basic things, which you can't live like that forever. So if you need to go back to school, go back to school. If you need to learn something online for free, there are a lot of things online for free you can learn, and then you use back the skill and earn some more money. You need a side income. You need to upgrade your education, get some professional certification, upgrade your income. Minimum wage, the financial planning for that doesn't go, it not go nowhere because you have to have money to plan for finance. 150,000 in a year yet, right? You need more money than that. All right, so we are not saying to you that we are looking down on your income. We are just saying that based on your income, there isn't much you can do. That's what we are saying, right? So no matter feel away when they bring up minimum wage and whatever, it is not to disrespect your income, because better you have 150 than you don't have none at all. Better you have 150,000 than you don't have any. Right? All right. So number 4 was fully funded emergency fund. 3 to 6 months of your monthly expenses. All right? All right. So number 5, managing college fund for the kids. For those of you who have children, or even college fund for yourself, because these days people going back to school at all ages. 40, 45, 50, 60. Listen, there is no limit to learning. If you need to go, go. I need to go. I will be going back. Yep, because sorry, learning more helps you to earn more. So if you're going to learn a skill, go learn the skill. If you need to learn accounting, finance, bookkeeping, whatever it is you need to learn to get you to where it is you want to be, go and learn it. Take time and save up for it. That is what you need to take the loan for. Take the loan and go back to school. But don't take any expensive loan that you know you cannot manage. So even though the reason for taking the loan is a good reason, we call it good debt. Good debt is when the purpose for taking the loan will allow you to be or potentially be better off in the future. We call that good debt. Bad debt is when you overspend and you just want to buy clothes and shoes and things that depreciate in value. You don't get any positive return in the future. We call that bad debt. All right? So take out a loan and go back to school. Take out a little loan. If you're even $30,000, you can't afford the $30,000 to do the professional certification. Go take out the 30,000 loan and go to school, night class, Saturday class, Sunday class. Go to class. All right, so that was manage college funding for kids, and I also put in for yourself because education is not only for your children. Okay, so number 6, we're at number 6, consider financial planning. Consider financial planning. What that means, what it means is that if you are not in the financial planning industry, there are things you don't know that you don't know. And you cannot plan your finances on ignorance, on lack of knowledge. You have to plan, or you have to be guided by someone who knows. So financial planning entails, wow, a long spectrum of things. Now, as a financial advisor at Law Insurance Brokers, yes, I have 2 jobs. Since you guys, yeah, I'm a money coach at Money Coaching Services, and I'm a financial advisor at Law Insurance Brokers. So for my clients, I provide financial planning covering estate planning, and we go through a whole myriad of things, from your income come down to your emergency fund to how much you need to have for insurance if your child is X age and you want them to go to university, how much you need to have in place if in case you pass away and your children are X age, how much money you want to leave back. And if you don't want to leave back a lump sum money, you want it to go on something called an annuity. An annuity is a product that allows lump sum to be split up into smaller increments like income. So this is what the rich people do, right? They don't leave 50 million or 100 million to them kids like that. What they do, they set up an annuity, and the annuity has breakdown. So say for example, for the next 25 years, you want your kids to have 100,000 per month. That is what the annuity does. So instead of them getting the 100 million or the 50 million, that is what you do. And for persons, if you win the lotto and you're no good with managing money, ask about annuities. All right, so I help persons with annuities as well under financial planning. All right, so we're done with the financial planning, and we are at number 7, which is have life insurance and critical illness insurance in place. Now, these are 2 very important categories of insurance that a lot of people take for granted, especially the life insurance, because some people say, oh, I am going to die and somebody else is going to get the money. Darling, I know your family. I know you them have your name, Papa, Mama. So you have to think about it in a more constructive way than that. Also, for some of you don't know, you need life insurance if you're getting a mortgage in Jamaica. Yeah. You need life insurance you can use life insurance for estate planning. What is that? That is what the rich do. They have money to ensure, as the Bible says, you leave a legacy. So the family don't have to start planning the wealth from ground zero. They have a foundation set and they can build on that with what you probably have taught them, or if you send them to me for me to guide them, then I can help them to figure out how much money they need in retirement, how much money they need for investing. Or yeah, if they're going to purchase a house, or would they qualify based on the income? How much more income would they need? Those things. Yeah. But we are on insurance. I strayed a little. I'm sorry. Yeah. So life insurance and critical illness insurance. The critical illness, you see, people? I don't remember which year, but I think it was, yes, 2017. It just popped up in my head. 2017. There was a study done. Cancer Society have it on their website, because I got information from the website, that, no, it wasn't Cancer Society, it's Ministry of Health. Sorry, Ministry of Health. It said that in 2017, critical illness falls into the top 5 reasons or causes of death in Jamaica. There was another study that said that stroke is the #1 cause of death in Jamaica. Stroke is a critical illness. It's not a car accident that kill you. It's not domestic violence kill you. So I don't understand people who say, "Oh, I don't need a critical illness plan because we don't have on investment." Seriously? Everything in life have a specific purpose here, people. And then also there are critical illness plans. You have medical plans. So you have life insurance and critical illness plans. We have the medical version and the non-medical version, right? Either one, you can ask me to run a quotation for you. What I do, I run it per million. When I run it per million, it gives you an idea now, so you can max out how much you can afford, or you can ask for a recommendation. But the recommendation is going to be based off your income. So it's gonna be based off your income. So the minimum amount is, say, 10%, 10% of your monthly income is the amount should be going towards the insurance. 10%. Right? So remember, I teach you. 50% for needs, 30% for one, and in the savings and financial goals, I remember financial goals, the different right now. Savings and financial goals is 20%. So out of that 20%, 10% can be targeted to insurance. So you get to cover the critical illness, and you cover life insurance, and then you can drop on a little investment on it, right? But you must have the life insurance and critical illness at or by age 40. If you don't, hurry up and contact me. Fast, fast. And those of you to reach age 60, let me put it in, even though we're talking about goals you should have by age 40. Most critical illness plans in Jamaica cut off at age 60. So even if you have the money, people, you will not get a critical illness plan once you pass that age. So as I said before, my number is 876-499-6701. And if you need a quotation, I will give it to you, and I will quote what $1 million at your age, how much that look like, and then we work out the math, right? It is up to you if you want to continue, if you want to do it. If not, when the problem comes, it's going to be your problem. It's not going to be my problem because you're going to be the one feeling the expenses. And anybody that follows this channel knows that if you have financial stress already and you get a critical illness to add to that, you stroke you want to stress on top of stress, give more critical illness. So you're already stressed now with your finances. It's going to deteriorate your health. All right, maybe not going into that yet. Can we have health from paper? Sorry. Okay, so number 8 is avoid using the equity in your house. Be careful when you pay off the mortgage. When you not pay off the mortgage yet, but you have a good equity. What is equity? Equity is the value of your home minus anything you owe. So if you have a mortgage, so your value of the house is 20 million and you have the mortgage is currently at 10 million. So you have $10 million of equity. And you see some Bitcoin or some Forex or something, and you are excited to invest and you want to invest the equity of the 10 million. Not a good idea because you have to limit what you invest in. First, you have to know what level of risk you're going to put the equity in, because if it goes bad, you no longer have a house. You don't want that. At age 40, age 50, age 60, because it's going to be difficult for you to get back another house, so you don't gamble with your house. What I normally recommend is that persons you want to take a home equity loan, contact me, 876-499-6701, and I will review what you have as your budget and all your numbers, and I will explain to you what are the options available to you that are in your best interest. All right, and number 9, we're at health. So health should be a priority, at least by age 40. Health, as the adage, as the old saying goes, health is wealth, because that is something that can eat your wealth to nothing. Having a medical bill, having a critical illness, getting a stroke, getting cancer. Hello, there was a client, he wasn't my client, but another agent's client, and she was saying to him, you need to get a critical illness policy. So because he played football, he was in tip-top health based on what he knew. One day he got up off the bed, or tried to get off the bed, and dropped a ground straight like a bird fruit. Woof. He had a stroke at age 25. Age what I say? 25. And you might be saying this is a one-off case. Well, I went to my dressmaker. Yes, I'm from St. Mary's, so sometimes we use dressmakers. We don't buy everything at the stores, right? So we do some adjustments as well. So, and I was telling my dressmaker, and she said, yes, there's somebody in the lane that he got a stroke at age 23. So people are thinking that because you feel strong and you're 40 and 40 is the new 20, that it cannot happen to you. Well, guess what? My sister died from leukemia at age 12. No, If you're watching this channel, you're most likely older than 12. That is a critical illness. And this is before I came into insurance. It's after she passed away, I came into insurance. I came into insurance during COVID because I was trying to pivot. You know what they say? Pivot your business, look at new ideas. So I started money coaching services 2017. COVID came 2020. And I said, okay, probably I need something else to kind of go along with the business. Yes, so I chose insurance because I'm coming out of banking. So I said, all right, let me try something different. And I said, let me get some knowledge in insurance. So even if I don't spend 18 years in insurance like I spent 18 years in banking, it is a wealth of information I need for myself and my family and my friends that I can pass down to them. Listen, guys, I teach my kids these things. Alexander is 11 and he's saving better than some adults. Marcus is 23 and him put a lot of to shame because he's been saving consistently from age 7. But it is not to be judgmental to you. What it is saying is that the more time you have to put your plan in place, is the more successful it will be. So that is what I wanted to leave with. Starting early and having clear goals set out financially for yourself so you can go down the list. I'm going to put everything in the description under about the video and list down each thing so you can just tick off what it is that you already have done, what you have not done, and if you need guidance, you know, I'm here at Money Coaching Services at your service. I will help you bridge the information highway and help you to get to the level that you need to get to so that you can manage your money. Because managing your money is very important for you to be able to reach your financial goals. But actually knowing what should be in place at age 40 is a good way for you to feel confident that you are on the right track. All right. So I'd like to thank you. Thank you for watching. Thank you for watching. Subscribe, subscribe, and hit the notification bell so that you know when we are on again. Okay, people, have a blessed day. This is Tajin, your money coach, and I want you to know that we are here to help you so that you reach your goal. Yes, you may have passed age 40 and not achieved some of these goals, and probably you weren't even aware that some of these goals, what the ideal age was to reach them. So now that you know, we can put plans in place for you to get going, learning and earning, planning and achieving. So visit moneycoachingservices.com/class. Because we're having class, and we are teaching you business owners how to grow your business, how to get more clients, more sales, and individuals. We're teaching you how to get those financial goals in place, right? So I like to be vulnerable in the sense that I can tell you that, yeah, things happen in my life and things are not exactly 100% where they should be. And so what? I'm not saying so what as if I don't care. What I'm saying is it's not the end of the world. That's what I'm saying. You have life, you have health, you have strength. So today is a new day for you to conquer all your financial goals. And I'll be here to help you every step of the way.